Hey guys, this is Simon with Trade and Perform Coaching. Doing a quick trade review. Remember, nothing in the video is to be considered a trading recommendation. This is purely for educational purposes. My goal here is to help traders become better traders. So let's kind of jump into it. And what I want to do is do a quick review of the last week. So two things are going on in ES that are making things really difficult. First of all, we're one timing to the upside. What that means is on a day over day basis, we are unable to trade below the prior day's low. And that's different than close below the prior day's low, right? That's a higher degree. All we're looking for, or all I'm looking for at least, is the ability for the market to trade below the prior day's low, because that signals that maybe, just maybe, we get a change in character of the market. And hopefully that change, when it comes, is a two-way market. But right now we do not have a two-way market. So going into the week, I know a couple of things. Number one, I'm looking for longs, right? I'm not trying to pick a top on the market. If I take shorts, they'll be sparing, right? And I'm probably quicker to cover my short, and I'm probably using less capital for that short than I am for my long side trades, right? Number two, there just haven't been a lot of long side trades, particularly if you're coming at this market from a swing trade. But let's go analyze what was available. So first of all, I'm kind of going to go through without giving my specific support resistance zones, because in this particular case, it doesn't matter that much. I just want to take a look at the bigger picture, right? So let's go back to the 13th. That was Monday. We clearly gapped up. So the first signs, right? The first signs that buyers were in control. And I go through this list every day, every time we have a gap up. I'm generally sitting out the first half hour to 45 minutes each day. And the first thing I'll notice is on this particular date, there is no half gap and there is no gap fill. So immediately I know buyers are in control. If you look at it from even a more basic standpoint, what you'll see here as we dive deeper into Monday, and I'm going to make this, I'm going to put this down here, make this a little bit wider. And again, my goal is to keep this to 10 minutes, so I know I don't have a lot of time. So a couple of things. First of all, you'll notice NYSE tick, which for me is a general measure of the health of the market. And the first thing you'll notice is the NYSE tick is unable to generate, in addition, a tick below negative 600. Forget getting to 600. It can't even print a 5-minute bar close to 600. Additionally, it's kind of a weird day because we can't get it to print close to positive 600 all the way until 12:30 in the afternoon. So the first thing that tells me is the market's kind of wishy-washy. Sellers have no edge whatsoever. They have no power. Buyers don't either, right? But in a bull market, the buyers already have the general underlying trend in their favor. Additionally, when I look, we can't break the last 5-minute swing low. You'll see as we're going through the morning, we keep pushing up here, right? This ends up being the first hour high on Monday. And then if you'll look, and I want to point this out, we almost come back to a 50-60 retrace and a break of IB high, and then a push back into the mid, right? Although we can't get back in there. And this has been a lot of what's been frustrating traders enormously, right? First of all, look at the size of the rotation from 22.34 to, 23.24 to 23.22-ish, right? 4 points. Now, if you've been trading ES for any amount of time, you know that's a very small rotation. So the market's forcing you to cheat up if you're waiting for 5 and 10 point, particularly for 10-point rotations intraday. We're just not getting them most days. So again, when doing the analysis, if you'll notice that once the tick is actually able to print a bar at positive 600, meaning it's sustained pushed up, we actually end up with somewhat of a two-sided market. And then the last piece in doing your analysis, we start off at 23.19 and we get all the way up to 23.29, which is a 10-point rotation. In the market, that's been a golden rotation. Again, I am not looking to short this market, certainly until I see some kind of tradable break, right? I'm not a position manager. I'm a intraday swing trader / scalper. So I'm going to look to be on the side where the traders have the greatest advantage, and right now that's on the long side. So day one, right, there was very little room for entry unless you just simply bought the gap or the first 50-60 retrace, which we had right here, which is not in my playbook. Why? Because the odds of that working in a large cross-section of markets just doesn't pan out for me very, very often, and particularly without some kind of extension on the tick to let me show that that there's been some kind of shakeout. That's not a valid trade. A break of the first hour high and then a retrace to the mid is a valid trade. I don't get a trade there, right? And then the last thing I want to do is short this when I think it's going to run to the upside, right? So not much for me to do on Monday. That really encapsulates where a lot of people have been very, very frustrated. Let's move to Tuesday. And the first thing that you're going to notice is we rotated to 23.29 and we pull back where? Right back almost to 23.19, right? So normally I would look for this kind of pullback within the course of intraday, but we're just not generating enough rotation size and energy to get a pullback. So how do we analyze this particular trade? Oh, and I had one more piece. When you look at the volume profile from Monday, that would be, excuse me, what date was that? Let me jump back real quick. It's the 13th. So when we go back to the 10th, right? The other clue there that we didn't have a short was the inability to test to the open gap again. But the other key would have been, I would have gotten somewhat bearish if we could have gotten below or gap below the high volume node from the 10th on the 13th. Again, we didn't get there. To give you an idea of how I would use that, the area where I'm really looking to go, okay, I can start entertaining shorts on decent rotations up, perhaps with tick divergence on the upside, is if I can get below and hold below 23.40 on Monday, right? So I want to give you that comparison. Even if you were uber bullish on this 23.20 gap, you're at all-time high. What do you need to see? You need to see, first of all, an ability. One of the metrics is, can you trade below prior day's low? That wasn't even in the ballpark. But even before that, could we get below the prior day's high volume node? And frankly, this should have been a responsive buying area. First time in for multiple reasons, including the stretches. I would have expected to get a response at that location first time in. So rolling to the next day, meaning the 14th, the first thing I'm going to look at, I've got to get below and hold below on this particular date, approximately 23.21, 23.22, right? So if I go look, what you'll see happen here on the following day is we gap down. We made an attempt to close the gap. No big deal here. Remember, there's nothing for me to do because when I look at my volume profile here, when I go back to the volume profile from that date, I'm on the 14th, right? I know that, first of all, if I hold below, there's the open gap, right? But in order to get bearish, I'm not going to be shorting here, right? Because I've got to get over this big chunk of it was essentially a double distribution day, and I've got to get below this 23.20. And even with that, I've got to fill this gap and then hold below this level before I'm bearish. I'm looking long, right? So since we're not getting the rotations and rotation size, and we're not getting the velocity, what are the other things that we can look at to figure that that 23.20 is going to hold? And that's where I wanted the focus of this particular trade review to be. So if you look when we come down, first of all, it's a rotation from 23.29 to 23.20. Normally I would care less about the 10-point rotation day over day, but in this very low volatility environment, that has to be considered a stretch. Next, if I look at my volume, my tick divergence when we're coming into this location, and by the way, we pretty much nailed the long out of this location on this particular date, and it was very gratifying, right? So if you look when we push in first, tick, you'll see that we came in with the ticks opened all below zero, but in this market, that hasn't meant a lot. It's been particularly the ability to extend below 600. That's been the only way we've gotten any kind of serious downside rotation. So if you look, this tick right here, this is my biggest negative tick. Okay, so when I break this low right here, when I break this low on this bar right here, what I would expect to see when I see this bar break, right, is I would expect to see both an increase in volume and an increase in the number of shares that are ticking down on the broader market to accompany the movement down in the S&P 500. And what you'll notice was that there was very little negative tick participation on this push down. And then you'll see on the following push down, so that's you're going through and you're looking. So this down, that's this down bar right here. If you look at the next down bar, right, that's this bar right here. You'll see that volume actually dropped off by the time this bar is completed, and that the actual body, the majority of the ticks, did not print anywhere close to negative 600. As a matter of fact, it was the opposite. As soon as we tagged a negative 600 tick, right, which, understand, 5 or 6 months ago meant absolutely nothing. It had no, there was no reference. A negative 600 tick had no meaning in a balanced market that we had even 3 months ago, right? What you're looking for is a negative 700, 800, 900 tick, right, to give you an indication that we were stretching. And as you can see, when we hit that negative 600 tick, we get an immediate response up. This is still not quite what I was looking for, right? What I'm really looking for is now I have a base to make some decisions off of. First of all, I now have a swing low, I have a push up, and I have a swing high, right? And now I want to see how the market behaves on subsequent breaks. And then you'll see right when we get in here, right? Notice that the volume here increases as we're pushing down. We have an increase in volume, but notice the tick, while it's trying to push, still has an inability, right? Still has an inability to push lower. And you'll see, even though we wicked below the low, we still closed well within that 23.20.51, right? And then finally, when you see when we closed back in, I would consider this push an attempted and failed attempt to a push to a low. So what I do when I see this push back in is I'm going to come over here and I'm going to say, hey, I really want a 50-60 retrace, right? And when I look for a setup here, I'm looking for responsive buyers on this 50-60 retrace. And where am I going to place my stop? Place my stop 1 point below the low, which is going to be approximately 23, let's call it 1875, right? So even with all that being said, once I enter this trade, I know that I have a couple things going for me, right? First of all, I know that there have, on each push down, we've had an inability to close below the original push to a low, which was right here, right? And what I would expect is that as volume is increasing, right, that price, right? So remember, there's two components. Volume increases, you would expect price to move a little bit more freely to the downside if the pushes down aren't being absorbed. So right here, you're going to see we have another big push to the downside. Look at the tick. Tick doesn't advance. We can't get beyond negative 600 when pushing here. And then finally, right here, we get the biggest volume push of the morning to the downside, right? Since we started pushing lower, right? This was the first big volume push, second, third, fourth. This is the third attempt. We get the most amount of volume on this push just beyond 10 a.m. And look, they can't even close that 5-minute bar below any of the prior closes, even though they got the most volume. What does that tell you immediately? That tells you that they put an awful lot of effort in breaking that low, and were unable to break that low. And then what do you have? You have traders trapped, and you move back to the other side of the range, and then again, because we're in a bull market, once you have these guys trapped off the lows, it was pretty easy just to take it and run it up all day. And you also notice that if you don't have pinpoint precision in entering your shorts, you really got run over all the way to the upside. So even within this market where there's not a lot of opportunities, if you'll keep your eyes and ears open to what the market's telling you with regards to volume, tick, and rotation size, right, and who's in overall control, again with monitoring prior day's low, you can build a pretty good picture for where you want your entries and where you want your stops and where the likely outcome is. If you'll notice now, we go to Wednesday here, and again on Wednesday, if you'll see, the only trade setup that was available on Wednesday, as far as I can see, again, we gapped down. The gap down had no responsive, didn't have responsive buyers, but certainly didn't have any follow through the downside. You can see they immediately stepped back in and started to push back up. What were some of the clues on that gap down that we really weren't in serious trouble? Well, my first one was we couldn't gap even to the bottom third of the prior day's range. We were really just kind of testing down. That's it. We really, when you look at from where we closed the prior day, if I were going to be bearish, and again, what the purpose of this is to try to give some traders some help to figuring out where we are in the market. We can't even get back to the 50-60 retrace of the prior day's range, right? Immediately, that's bullish. Secondly, going back to people who are trying to short, if you try to short this gap fill and you were very patient, you got a backside test that allowed you to cover flat. But again, these getting run over, these trades, shorting gap fill, shorting test of prior day's lows, things like that, work much better once we've actually shown some ability to break to the downside. Buyers are in absolute control. And then the last piece here, you can see at 9:30, we broke the initial balance high, which was right here. And again, if you pulled up a swing low, swing high, we came right back into the mid after breaking the first hour high, the backside test, found responsive buyers, and we pushed up through the course of the day. It's hard psychologically for me and for a lot of people to buy when you think of the market as extended. But think of it differently. What if this is the first days or first stages of a very large breakout, right? The only reason you think the market's very extended is because you've gotten used to trading a sideways balanced market for years and years, right? It's been 2 years, I think, since we've been in a balanced market. But if we're breaking out, that trade is a very high odds trade, and it gave you your best location for an upside move. Okay, so next, and if you look at that extension up from that trade, it punched into 2237. I did not take this trade, and I really regretted it later. And the reason why is the trading opportunities have been so rare. I should have jumped into the trade and taken it to the long side. If you also look additionally, as we pushed into that 600, right? That was the biggest negative tick of the day since the open, right? And that tick, that negative push, had the inability to break the 50 retrace. It didn't even test the 62 retrace. That was another big clue. And that ended up being a trade worth 12 points to the upside. So I would very much add that to your arsenal. We certainly will be doing that in the mentoring room. So last, well, not quite last, but if you look into the 16th, when we came in, there was a couple clues that we were going to get a roll to the downside. And we actually got this trade. This was on Thursday, and we got this trade correct. First of all, one of the other additional clues that we're looking for in the room is the break of the prior swing low. And I measure that swing low by where was the last place we got an extension up. That came from this. This is the last location we got an extension up. We broke that swing low, right? And so if you come in and measure, now here you're caught in a conundrum. I didn't short it. What's the reason why? We haven't been able to trade past prior day's low. Shorts have had no ability to make their trade stick whatsoever. And even if that's the one time, even though that's the proper setup, and even though the trade looked like it was going to work to the downside, I've just gotten very, very conservative. I want to be on the easier side of the market. And if you look, we actually got that easier side of the market again. If you look, we pushed to 23.51 at the close. Excuse me. Wow, my ability to reclear, that's right, 23.51 I might need to go get new glasses here pretty soon. And where do we roll? All the way down to 23.41 Even intraday, we were at 23.49, and we roll down to 23.39. So the first thing I know in this environment, 10-point rotation down, buyers are in control. I'm now looking for what my next opportunity is. So I'm going to go through and do my analysis. This is the push down. This is my, right here, I get clearly the most volume of the day, right? I get a nice fat rotation down. I have a negative tick, but when I look at that negative tick, right, this is the first negative tick right here that has closed below negative 600, I think, in 2 weeks, right? And then lastly, I want to go look on the 16th. I want to go look at where my HVN was from the 15th. So when I look on the 15th, right, you can see it was a relatively clear distribution day, but look at where the most volume built was right here from this point to this point at 23.38 to 23.42. And that was the area, if I could get a push down, I was expecting responsive buys back above. If I could get a push below, right, particularly this point right here, which would have been a big stretch, then I would start looking for pushes back to the downside, right? But the fact of the matter is we came in, and if you look, right, they pushed into this HVN and they tried very hard to break this. So when you look, they push down, right? They push with the largest amount of volume, not just of that session, but if I go back and look at the volume, right, that's the biggest negative sell volume in days, right? So I would think when we get that big negative sell volume, I'd go, oh, there's going to be follow through. Sure enough, we get responsive buying right after that big sell. And then if you look, we come back in and you're going to see here that when we push back down, see when we push back down, we actually break the low tick right here on this bar right here. I'm going to ask myself a question. I'm going to go, first thing I'm going to notice is on that second break, right, they weren't able to garner anywhere near the volume. That by itself is not a big deal. But that negative tick, that's the biggest negative tick we've had all week. And on that 5-minute bar, we still closed above the low of the push with the largest volume of the week right there, right? And particularly of that day. So I knew right here, once they printed down like this, I was into a key area, meaning the HVN, which is I'm normally looking for excuses or ways to get a trade either short or long in that area. In this particular time frame we're in, I'm looking for longs. I've had a big push on volume. I've had a big push on tick with a decrease in volume, meaning I had more issues pushing down on the broader NYSE, but I had less volume trying to sell in the S&P 500 index itself. And with that bigger tick, they were unable to close that 5-minute bar below. As soon as they were unable to close below, I knew that was a long side trade. And if you look, we then proceeded to rotate from 23.38 all the way back up to 23.46. So the gist behind this story for the week is this. If you will be patient, if you will look for your trade locations, and if you will know what to expect when certain things happen, like if I get a larger negative tick, I would expect a lower price. If I get a very large sell bar, right? How do I figure out if it's climactic or not climactic? I'm going to watch the few bars afterwards and see if they're actually able to break that low. If they're unable to break that low, I'm looking for a long side trade. And then finally, you'll notice that as we come back up, right? This is the last point from which there's two ways to look at it. This is my last swing high right here. We rotate down. We're now making a series of higher lows and higher highs through there. As soon as I see this, the next trade location that I'm going to want to grab is my retracement right here, right at noon, and my stop is the low of the day. Notice that your stop size increases dramatically, but that push gives you a beautiful push up to 23.47. At any rate, that's my 2 cents for the day. Friday was very interesting. It was the first day we opened below. This was my key location here, and we opened below on Friday. So two things you'll notice when we push down on Friday. First of all, there was very little sell pressure to the downside. You can just see the number of look at the sell pressure here. Look at the sell pressure here. Almost nothing. Look at the tick reading. Here we get it. This is the tick low. Now notice we push again, and technically this is the most amount of selling pressure on the day, right? So what would I expect when I see the most amount of selling pressure is I would expect this low, the first 5-minute low, to get broken here. But you'll see they came back in. When I look at the volume, I see sell volume actually decreasing as we're pushing in towards the low, right? An inability to sustain the low. You'll see the wicks are indicative that there was responsive buying there, and then the market comes back in. Now, the last piece I want to say is this was a critical area for me. What I would have rather have seen would have been open here, push in here, and take a trade to the long side, right? Because this was my critical location on the day. And if you'll look, that critical location served its purpose. We got below the last swing low. If you took on Friday, if you took the short, meaning the 50-60 back on this trade right here, trot up. If you took the 50-60 back in, right, you actually had a beautiful trade from 23.42 right back down to 23.38. I passed on that trade. Why did I pass on that trade? Remember, I'm not just trying to figure out the puzzle from one day. I'm trying to do two things. I'm trying to put on a sizable trade, and I'm trying to be on the side of the market that's flowing the easiest. And right now, all the large rotations are to the upside. So this is a great example of where I just did absolutely nothing, because what I needed is consolidation to take place. I needed the opposite of what I had. I needed the market to open here, come down here, consolidate like this, and then push out. I would have had a beautiful trade. But as it was, we opened below. the resistance worked. I'm not looking for a short because we still have failed to trade below the prior day's low, right? And so therefore, what I chose to do was nothing, which at the end of the day worked out since we ended up rotating to the upside, and I also had the clue of a lack of any kind of sell volume or push to the downside. And again, in this market, even though you don't need very much volume because there's a complete lack of sellers to get a push to the upside. The first clue we'll know that things are changing is we will trade below prior day's low. This is Simon with Trade and Perform Coaching. I hope you found this helpful. Please leave positive comments or likes on the YouTube channel if you like the video, and any questions or feedback are welcome via Twitter, StockTwits, or on YouTube. Have a great day.